Well, the markets are off to the races this morning and continuing to climb as the economic reporting is odd. I mean, seriously odd, but the markets seem to be appreciating the weird jobs number, and we'll get into all of that in a minute. Tesla, in the meantime, was up strongly early, dropped off a bit, but seems to be going with the market and continuing to climb a bit as we start this uh, recording this morning. All right, so why should Tesla be up this morning? Well, it should be up a lot. Um, uh, we had this from 𝐒𝐚𝐲 Swami. We all know who that is. Ashok says, lots of work, but the team's aiming to get to feature complete for unsupervised FSD with the V13 series. So version 13 should include unsupervised. I believe that's the first time this has been stated. I could be wrong, but I think that's the first time. So version 13, now that I don't know that that means that version 13 that will be released theoretically at around for everybody, or, well, at least for all hardware 4 people, will be released around Thanksgiving. I don't know if it initially, as soon as that version 13 is released, will be unsupervised, or whether it be 13.1 or 2 or 3. In fact, I think 13.3 might be the first one released based on something I read the other day. Anyway, whatever it is, that's pretty significant news. So we'll see what happens with all that. And Elon Musk also posted this morning, I couldn't find the original post, but something on the order of the improvement in FSD is absolutely amazing. So there's also consensus going around, a good chance that Tesla gets close to or hits 515,000 vehicles in the fourth quarter, needed to beat the 2023 unit sales. Troy Teslike this yesterday reports that he is currently about 20,000 off that number, but only because current production rates wouldn't get the company to that number. I think a fairly minor uptick would do the trick. He thinks these additional sales would need to be Model Ys in the US or Europe, because he doesn't think that the China market is going to be where we get the increase. But it was also not clear to me why it couldn't come from a combination of smaller amounts of Model 3s and Ys, and why it couldn't be some kind of increase in China that would help out. Anyway, he expects the Cybertruck ramp to stall. I can't understand that at all, why there would be no increase in the fourth quarter compared to the third quarter on Cybertruck. So he states it without giving a reason. And I don't see any possible reason why they wouldn't continue to ramp up the numbers on the Cybertruck in the fourth quarter. It just no sense at all. All right. The street consensus is currently just shy of the 515,000 as well, maybe around 17,000 off of that. But as I've said many times before, I think Elon will find a way. That's just who he is. He'll pull something out of his hat to make that happen. Now, let's just say for fun, though, that the number falls 20,000 short. The impact would only be about, I mean, I know only, but only about $100 million. That's only 3 cents a share. If we use AJ's 95-cent prediction, that would make it 92 instead of 95. And I think that would be a seriously good result and would completely beat any analyst predictions that are likely to happen between now and the end of the year. So it also wouldn't impact materially my 2025 prediction of $4.13, not including any robotaxi revenue or any robotaxi revenue. Our earnings. I continue to believe we should get to a $300 price, stock price by the end of the year or end of January. And I think all-time highs by the end of the first quarter in 2025, maybe sooner than that. Again, very heavily dependent on the FSD improvements and also hitting those numbers. If we hit the 95 cents, if we hit close to last year's numbers on vehicle sales, and we get into the first quarter with some positive information coming out of the fourth quarter earnings report, then we should be at all-time high sometime after the beginning of the year. Maybe it'll take all the way to the end of the first quarter. All right. By the way, this is Randy Kirk. liking and subscribing and hitting notify is always a very good idea. Later this morning, Brian Wong has a very interesting report that he wants to bring you. I think you'll like it a lot. And then Larry Goldberg will help fill in the rest of the day. Okay. Total non-farm payroll. Are you ready for this? Maybe you've already seen this. I'll give you my analysis and an explanation, but if you haven't seen it, here you go. The total number of jobs added in the month just ended is 12,000. 12,000. That's no, not 112,000, not 1,200. The unemployment rate unchanged at 4.1, even though you have only 12,000 jobs increase for the month. But wait a minute. No, there's more. Employment continued. The numbers were knocked down by 112,000 from the previous 2 months. We'll get into that in just a second. So you really have a negative 100,000 jobs. And you've also got the unemployment rate unchanged at 4.1. How does that happen? Anyway, unemployment continued to trend up in healthcare and government. Duh. They're just spending money like crazy. But again, the healthcare, you understand, the aging population. Temporary help services lost jobs. And of course, guess what? Manufacturing lost jobs due to strike activity. Yeah, and just in general. The unemployment rate was unchanged at 4.1. The number of unemployed people was little changed. That's 7 million, and those were higher than a year ago. Last year it was at 3.8. Now we're at 4.1. Number of unemployed people was 6.4 million, and now it's 7 million. Okay, in October, average hourly earnings for all employees on private non-farm payrolls rose by 13 cents or 0.4%. to $35.46. Over the past 12 months, average hourly earnings have increased by 4%. We continue to see this increase in earnings between 4 and 5%. In October, average hourly earnings of private sector production and non-supervisory employees rose by 12 cents or 0.4%. That's a 5% year over year. Our annualized rate. Anyway, the average work week, which is also what we report all the time, is for non-farm payrolls remained at 34 hours, so that didn't change. In manufacturing, a little change also, but the overtime went down by 0.1 hour. The change in total non-farm employment for August was revised down by 81,000 from 159,000 to just 78,000. And the change for September was revised down by 31,000 from 254,000 to 223. Here's a bet. I'll make this bet with you. Next month, that number will be revised down probably to 125,000. Probably another 100,000 comes off of that number. That's just a bet. Okay. If the government has been ginning the numbers, which it just seems like they have, on these employment reports in order to help the incumbent party, this weird report today would seem to say the opposite. This certainly doesn't look like a gin number. How do you end up with only 12,000 for the entire month and 112,000 revised down 5 days before an election? So I don't know. I can't explain it. Maybe they're just incompetent. Did I say that out loud? This should and probably does seal the deal on next week's 25 basis point cut from the Fed. I continue to believe that these wage increases are going to impact inflation. I'm having a big argument with that with AJ right now on X. Maybe you could tune in and see the back and forth on that. But services are 65% of the economy. Government and healthcare are a huge part of the economy. And if the labor costs are going up at 4 to 5% per year, it's going to flow through. Anyway, I think this is also the Fed is going to have to take into consideration the ADP report, but I think they're going to cut. I think at this point, it's 100%. They're going to cut. All right, this is just breaking. The S&P Global U.S. Services, speaking of services, that PMI rose marginally to 55.3 compared to 55.2 the previous month. Anything above 55 threshold is supposed to be good. The expansion was fueled by the sharpest upturn in new orders since April of 22 as soaring domestic demand offset a slowdown in new export business. Still, the period saw a sharp drop in headcounts of service providers, although surveyees cited the decrease as the replacement of levers instead of outright layoffs. Okay, so it's just non-replacement of levers. They made a mistake there. On the price front, selling price inflation cooled sharply, even though input costs continued to grow at a considerable pace due to wage pressures. And I say that again, on the price front. Listen, AJ, selling price inflation cooled, so they couldn't pass it through as its lowest point in 4 years, even though input costs continued to grow at a considerable pace due to wage pressures. Looking forward, the survey's optimism gauge rose to a 16-month high due to strong demand for services, although some extent of uncertainty around the presidential election remained, according to S&P Global. All right, this also breaking. Construction spending during September 2024 was estimated at a seasonally adjusted annual rate of $2,148.8 billion. Anyway, a 0.1% above the revised August estimate. So just a 0.1% increase in construction spending. Private construction spending on private construction, a seasonally adjusted rate, unchanged from last month. So private construction unchanged. Residential construction was also in September plus 1.3 for residential, but non-residential was adjusted rate was down. Public construction estimated seasonally rate was up 1.8%. So yeah, plus 1.8%. Okay. Then we have this from the manufacturing sector. Guess what? Guess what the manufacturing sector did? Economic activity in the manufacturing sector contracted in October for the 7th consecutive month and the 23rd time in 24 months, said the nation's supply executives. The manufacturing PMI registered 46.5% in October compared to 47.2 last month. This is the lowest manufacturing PMI reading in 2024. The overall economy continued in expansion for the 54th month, but manufacturing down. The prices index returned to expansion, are increasing, registering 54.8 or 6.5 percentage points, up 6.5 percentage points compared to the reading in September. The backlog of orders was down 1.8%. The supplier deliveries index indicated slowing deliveries. The guy who's reporting all this says, his name is Fiore. U.S. manufacturing activity contracted again in October and at a faster rate compared to last month. Demand continued to be weak. Output declined. Input stayed accommodative. Demand slowing was reflected by new orders index remaining in contraction territory. So demand remains subdued. Companies continue to show an unwillingness to invest in capital and inventory due to concerns about, for example, inflation resurgence, about monetary policy from the Fed, etc. Suppliers continue to have capacity with lead times improving and some shortages reappearing. 63% of manufacturers' gross domestic product contracted in October, down from 77% in September. So manufacturers, so we continue to have this two economy situation going, and unemployment apparently under some greater pressure than we thought, except that ADP showed the opposite. So I don't, like I said at the beginning, very odd reports this morning and some odd stuff going on in the economy. I'm sorry, in the markets. So let's take a look at this. Tesla is now up 152. It's been up higher this morning. It's been down. It's been up less than that. It is moving around, however, in this around $2 range. Up this morning, with the Dow Jones up 462, the NASDAQ up 240, S&P up 59, and the Magnificent Seven all up except for Apple, which Apple had a pretty good report yesterday. I'm not sure why it's getting tagged this morning. Google is basically slightly down, slightly up. It's at break even. The rest are doing quite well this morning, actually. And the Cathie Woods are all up except for PayPal, which is taking a haircut. They reported earlier this week, not sure why it's down $2.44 this morning. But You would guess, of course, oh, I'm sorry, I didn't do the percentages. We've got the Dow Jones up 1.13%, NASDAQ up even more at 1.35, S&P at 1.07, and Tesla not managing to maintain its normal doubling of the NASDAQ. It is only up 0.56 this morning. All right, we go to those bonds. And what we've got in the bond department is the 30-year is actually up. It was down. Wow. So a little bit surprised that the Cathie Woods are doing so well this morning. So the bonds are up 2.1. Now, they come down yesterday. So this is going back up, but we're still at 4.3 at this point, 4.33, the recent high, and 4.25, kind of the range, bottom of the range right now. 4.3 is a little surprising, okay? Especially when I think that, the Fed cut now is going to happen for sure. We got the 2-year down this morning, 2.7 basis points, the 3-month down 2.8 basis points, and the 2-month up, call it even. Okay, oil. We have got oil this morning up $1.49, so we're back over $70 again. This is with Iran claiming they're going to strike back at Israel. So we have continued confusion in the Middle East. I don't know. I think Iran is making a very big mistake after Israel just showed them their capabilities. I think well, anyway, whatever. So both Brent and Texas Intermediate up about $1.50, $1.40 this morning. Natural gas down 0.85%, but still very high at 2.684. Okay, the reason natural gas is up so much is people are anticipating the amount of natural gas that the data centers are going to require in order to cool them. That is the headline. I haven't done a deep dive on that, but that is apparently why natural gas is holding up here in this 265 range compared to kind of normally would be around $2. Gold between 2 and 225 is kind of the range it's been. Gold is up 1670 this morning, but still down from its all-time high at 2,766. Silver at 33 this morning, up 0.71%, and copper up 0.65% at 4.368. The dollar is up against the Japanese yen, 0.43, and down against the euro, 0.248. Dollar a bit down this morning overall in general. Bitcoin up 1,121, taking another run at the all-time high, 71,471. And there you have it. So what are you going to, yesterday, Søren Basher, of course it was great. It was amazing. He talked about his trip up to Calgary. He talked about the data that came out of that trip, showed some amazing pictures, some amusing conversations he had with people along the road. If you haven't watched that video and you're looking for something to just be entertained, but also get some good data about FSD and his impressions about where we are compared to solving it once and for all, getting to feature complete, getting to unsupervised. Okay, that'll be right there. There is the card. Later this morning, we will have reporting from Brian Wong. Absolutely. Actually, it'll be Brian Wong today, Saturday and Sunday. At least I think that's what's going to happen. There's a little bit of uncertainty about part of that, but we're going to have a lot of Brian Wong this weekend because he's got a lot to talk about in terms of robotaxi, in terms of FSD stuff. Of course, with Brian, it's always going to be very fresh, very different than anybody else is reporting on. Okay, that's all I got right now. Look forward to talking to you a couple more times today. It's been great talking to you this morning.